All right, let's get right into it. We've got our hands on a really fascinating quantitative report. It's called The Alchemy of Alpha. And get this, it claims to have a winning strategy for the Korean stock market for the week of January 26th. So today, we're going to break down exactly what it's saying. So this is it, right? The big question every single investor is asking. Next week, is the market going up or is it going down? What's interesting about this report is it doesn't just, throw a dart at a board. It actually builds a really detailed case for what it thinks is going to happen.
Now, this report is making some pretty bold claims. So just to be super clear, we're not giving you financial advice here. Our job is to just pull apart the strategy this report is laying out, to help you understand the why behind its predictions.
Okay, let's dive right in. The whole report is built around this really cool metaphor, the alchemy of alpha. And what does that mean? Well, the core idea is that they're trying to blend old-school, timeless economic theories with all the power of modern data analysis, all to find, a real edge in today's market. And this isn't just about looking at a bunch of squiggly lines on a chart. No, the report's big argument is that if you really want to predict where the market's going, you have to look at what's being mixed together in this melting pot right now. We're talking about human psychology, massive tech shifts like the whole AI boom, and of course, the big picture monetary policy. So, how does this alchemy actually work? Well, the report says there are 4 key theoretical ingredients that are basically shaping everything that's happening right now. Let's break them down one by one. First up, we've got something called the crack-up boom. It's a theory from Austrian economics, and here's the gist. The report is arguing that with the Korean won getting weaker, people aren't just buying stocks for growth anymore. They're actually fleeing their own currency. And in this scenario, something like semiconductor stocks, well, they start acting like a hard asset, like gold, a place to just park your money and keep its value. All right, next up is a fascinating idea called swarm stupidity. Think about it. We're all so connected these days, right? So when a huge story breaks, like SK Hynix selling out its entire 2026 supply of those critical HBM AI chips, it can create this massive herd mentality. This swarm just takes over and becomes a force of nature, completely overwhelming any kind of rational individual thinking. The third ingredient is all about looking at the big picture, the historical context. The report pulls from research on market cycles, specifically the 9.2-year cycle. Now, according to this theory, 2026 could be a major peak. And if that's true, it means we are right now in the final, most powerful, and often craziest stage of that long, long climb. And the last piece of the puzzle is the idea of super stocks from Ken Fisher. His whole thing was that you don't find the real market winners by looking at their profits this quarter. No, you look for insane, explosive sales growth over time. And this report, it points right at SK Hynix as a textbook example. It's saying that the company's massive sales are the reason its high price tag actually makes sense. Okay, so you've got a crack-up boom, a super stock, swarm stupidity, and this long-term cycle all pointing up. That's the big theory. But how does the report take all that and turn it into a concrete game plan for the week ahead? All right, here it is, the headline prediction. The report doesn't just say market go up. It's way more specific. It's forecasting a strong, bullish, then volatile week. What does that mean? A sharp spike early on, but then a lot of turbulence. So yeah, there's opportunity, but it also means you've got to manage a ton of risk. Now, this is where it gets really interesting. How does the report plan to actually manage all that volatility? It uses this thing right here, the CCI indicator, as its main mood gauge for the market. Take a look at this table. See how when the CCI is over plus 100, it's a green light for active buying? But once you get into that plus 150 to plus 200 range, it's a warning sign. The market is overheating and the strategy says to stop buying and get ready to sell. And if it goes over plus 200, that's extreme overheating, pure greed, and the signal is to get out and take profits aggressively. This little gauge is literally the key to their entire plan. Okay, so the forecast is bullish. Now let's get into the nitty-gritty. What's the actual game plan? How does the report say you should actually play this? The whole strategy zeroes in on one specific tool, the Codex Leverage ETF. Basically, this thing is designed to give you twice the daily performance of the KOSPI 200 index. So yeah, it's a really high conviction bet, which also means it's a high-risk way to play this potential rally. So the logic is super straightforward. The bet is on the whole KOSPI 200 index. The goal is to catch that wave we talked about, the one being pushed by the crack-up boom and the super stock rally. And the method? You ride the momentum, but, and this is the really important part,
You have to follow very, very strict rules about when to get out. The report gives a super clear entry point. It's suggesting an entry right around Monday's opening price, somewhere around 68,410 won. And it even says, hey, if there's a dip down towards 68,000, that could be a second chance to get in. And what about getting out with a profit? Well, here's the target, 74,000 won. According to the report's own analysis, that's a major resistance level, so it's the logical place to sell and, lock in those gains. Now, this next number might just be the most important one on the screen, the stop loss. This is the safety valve. The report is insistent on this. It sets a hard stop at 64,500 won. If the market suddenly turns against the forecast and hits that number, the plan is simple. Get out. Immediately. Cut your losses and live to fight another day. Okay, so the report is very clear on what it thinks you should do. But it's just as loud about what you should not do, and it issues a huge warning against betting that the market is going to go down right now. And yeah, they really don't hold back. The report literally calls investing in inverse ETFs right now poison. I mean, that's about as clear as it gets. It's a stark warning. Do not try to fight this powerful uptrend. And there's a technical reason for this warning. It's not just don't fight the trend. The report talks about something called volatility drag. The simple way to think about it is that the way these inverse products are built, they can actually lose value over time in a choppy market, even if the market basically goes nowhere. It's kind of like trying to run up an escalator that's going down. You're just working against yourself. All right, so we've gone through this whole deep report. So what are the key takeaways? What's the absolute bottom line of this whole alchemy of alpha strategy? Okay, here's the summary. You've got strong fundamentals, like with SK Hynix, pushing the market up, but that push is getting amplified by this almost euphoric crowd mentality, which also ratchets up the risk. The whole game plan is about riding that wave, but keeping a close eye on the CCI indicator to know when to jump off. It gives you a clear entry, a clear target, and a clear stop loss. And most importantly, it screams, do not try to bet against this market right now. So in the end, the report lays out this really compelling, theory-driven strategy. It's like a formula. But it leaves us with one massive question, right? Will this alchemy of alpha actually work? Or is the sheer chaos of the market, the madness of the crowd, just going to smash it all to pieces? That's the real drama we're all about to watch unfold.